The February jobs report is out tomorrow, and joining us now with a preview is Mitchell Barnes, jobs and labor economist for the Conference Board. Mitchell, good morning to you. Welcome.
Good morning.
So what key indicators should we be looking out for in the jobs report, and how do they relate to the overall health of the economy at this time?
Right. I mean, really what we are looking at is the pace of job creation. Is that enough to really keep unemployment down, really to fend off maybe some layoffs that we're hearing about, some retirements that continue to hit the labor market, and ultimately how wages and the consumer are doing really after that?
What should workers, job seekers, employers take away from the report to better prepare for the upcoming months?
You know, I think this is going to be an interesting report. I think there's a lot of uncertainty in the data that we see right now, really around sentiment, what some of the uncertainty around the actual policy impacts and implementation of some of the policy developments that people are hearing about. So I think this is really something to stay attentive to, but it really is going to be, how do businesses react? How do consumers, react in their spending?
So when you've got all these federal worker layoffs and whatnot, how does that factor in to the overall numbers in your estimation?
Sure. And I think that is really the question mark for us of whether we see that and what magnitude we see that in this report. I think our expectation is that next month's report and really for the next following months, we are going to see some fallout from that. But I think, again, the question is not just what is happening at the federal level, although that is something that we're concerned about. It's really how do private sector companies, how do some of the contractors and some of the organizations affiliated with the government really react to this uncertainty.
And then I guess the other question is the tariffs. Home builders, obviously, they've been struggling lately. Lumber is now going to be more expensive. Appliances are going to be more expensive. So how does all that weigh into the bigger picture?
Right, and I think, from a Federal Reserve policy perspective, I think really right now what they have to weigh is what you say is some of the inflationary risks that we see from some of these policy developments. How, again, they really ultimately come out, I think is really an open question. Some of the backtracking we've seen, you can say that, maybe that's a negotiating tactic, but what it certainly does is puts a lot of uncertainty out into markets and into the economy.
So with the tight labor market, many companies have been offering higher wages to attract workers. Will we see any signs of wage inflation in this February report, do you think? And how could that affect consumers? I know confidence right now with consumers is down a bit.
Right, and we've really seen wage growth continue to be, rather firm. Really through the back half of 2024, we had seen job growth and wage growth kind of pick up in tandem, and really the economy was set at a pretty strong starting point to enter this year. So I think wage growth is going to continue to be a story until really we get a little bit more information of whether some of the weakening and some of the fallout of these policy impacts is actually going to occur.
I know we kind of touched upon it earlier, but unemployment's been at historically low levels. Is this sustainable, or do you see a shift coming in the coming months?
I think ultimately we were, seeing this loosening cycle, but really, again, I think we had hit a pause point in that loosening really towards the back half of last year, and we were looking rather positively for our outlook for this year. So I think that unemployment number is going to continue to stay low, wages are going to continue to stay high, and kind of the labor shortage story and American demographics, I think, are going to start to come into play as well.
All right, Mitchell Barnes, jobs and labor economist for the Conference Board. We appreciate your time. Thank you, sir.
Thanks.